How much goodwill can be priced into a stock? Today, we are here to talk about Amazon. Now, I'm sure everyone is well aware of it. I'm sure many of you have used their services. As a consumer, I love Amazon. They could not offer better deals. They could not get stuff to my house faster. But as an investor, it leaves a little bit to be desired. Where do I start with Amazon? With a current price of over $1,000 as of 7/24 of 2017. I think there is a lot of growth with a lot of uncertainty priced into the stock. I'd like to first remind you that as of 2014, Amazon actually had a negative earnings year. Yes, that's right. Less than 3 years ago, Amazon was still not making money. And even today, they're making paltry sums. Their first quarter saw about a 2% gross revenue. That's insane. That's insane. What kind of company pulls in $35 billion with a B in cash and makes less than $800 million with an M? To me, that's insane. Oh my, and that's including the $99 they get from millions of people up front. Costco does the same thing, and their margins are slightly better, but they're also not trying to compete on price like Amazon is. A website is not a moat. People are paying over 185 times their price to earnings. Like, that's insane. Retail was already dying. I've heard enough of the Amazon effect. I don't want to hear any more about how Amazon is killing retail. Retail was dead far before Amazon got there. Look at the real estate in some of the stores. Stores are closing all over the place because they built too many of them. Why the hell did Payless Shoes, which has a very small customer base, need the thousands of stores they had in obscure locations? In my small town, they had 3 Payless shoe stores. That was 3 Payless shoe stores too many. Amazon did not kill them. Their overbuilt stores was. The free-flowing capital that has existed in this country, as well as around the world due to quantitative easing and other effects, has existed for far too long. Amazon is not the cause of that. Bed Bath & Beyond has seen 20% annual growth in digital. Target has seen 22% growth in digital this past first quarter. Walmart, the tortoise in this race, has only begun to move into digital, and their website is already at half of the visitor count daily that Amazon is at. Who do you really want to bet on long term, the hare or the tortoise? The other problem I have with Amazon is what is different from a catalog and Amazon. Amazon is not providing any services beyond simply displaying goods and selling them at a cheap price. In the 20th century, everyone loved shopping from catalogs. That's all that Amazon is doing. They're just doing it virtually. And I know what you're going to say. Oh, well, their supply chain is so efficient, and this and that, and they're going to move into the huge growth markets overseas. 32% of their sales last year were already overseas. Do you really see that much more growth? What about all their overseas competitors, Alibaba and the such? They don't even know what's going on in emerging market regulation. They don't know how they're going to invest the large amounts of capital required to ship all across India. I've heard multiple times that India is the promised land for Amazon. I think if they move into India with enough force, they're going to be dead in 2 years. All right. Now let's talk about the Whole Foods acquisition. All right, let's take a 2% growth margin business and have them buy another 2% margin business. That is a terrible idea. Ignoring the fact that I don't even like Whole Foods that much. Their stores aren't that nice. If you've ever been to Wegmans, Wegmans is significantly better and they're cheaper. There's no way that I understand their plan of, we want to move into people can order their stuff online and then pick it up. I don't know if you've ever visited a Whole Foods store, but they are in terrible locations for that. They're always located in cities. They have very small parking lots or inconvenient ones at best. Do you really think you're going to have a line of people pulled up in front of the New York City Whole Foods waiting to pick up their groceries from some robot? I don't think so. Oh, well, what about the pharmacy business that they're moving into? Ooh, great, and even lower margin business. I guess if that's their strategy, is to earn 2% on less than 2% on every single business in the world, while simultaneously making their supply chain more complicated with every single business that they pick up, Good for them. They're willing to try it. Good for them. Well, wait a second. What about their web services? That's very high margin. Well, it's not that high margin. I believe last year was 25.4% operating. That's not their actual gross margin on that. Whereas Google and Microsoft were touching 40 last year. I also don't think that I would want to compete against Microsoft, who has more cash than you can even imagine, possibly save Apple. So good luck competing with them long term over that. I suppose what I'd like to sum up is retail is a brutal business. Amazon is in a brutal business in every single facet of where they're fighting. And I don't think the true fight has even begun. I think there are a lot of people who are very optimistic about something in which there is a great amount of uncertainty. Do I think that it would be a good idea to short Amazon? Absolutely not. I think you'd be stupid. I think there's too many institutional investors in it. I think while rates stay this low and people are desperate for alpha in anywhere they can find it, and if they think they can find it by betting on the dream that is Amazon, then I give them all the credit in the world. I also would not ever bet against Jeff Bezos. I think he is, if not a particularly fiscally savvy businessman, I think the man knows how to sell. I think he can talk a good game, and I think that alone, as we've seen with Tesla, will take you very far in this world. So with that, I will end what is my first video on YouTube. I hope this was mildly useful to you. I hope I brought up a couple interesting perspectives. I promise every video is not going to be quite this bleak and dark and bearish, but I think there's a lot of optimism priced into Amazon, and I came home late from work today and had to get it off my chest. I had heard one too many people praising the holy Jeff Bezos, and I just wanted to get a little bit of that off my chest. So I don't know if I'm going to do any more of these. It's kind of nebulous if I will post another one of these videos, but we'll see. Thanks for listening. The song of the day, I'd like to do this as well because I'm a big fan of music, as you can tell from my username. The song of the day is going to be "Rhymes Like Dimes" by MF Doom featuring DJ Cucumber Slice. So check that out. Check him out. It's a great thing. I will also, full disclosure, I'm not a financial advisor, and I am currently do not have a position in Amazon, nor do I intend to initiate one in the next 72 hours. So hopefully that shows you I'm not short the stock or anything like that. I don't have any ulterior motives. I just I think it's insane the way that people are currently valuing the stock. So thank you. Have a good night.